Good morning, everybody. Welcome to today's 1 Million by 1 Million Strategy Roundtable for Entrepreneurs. 1M1M, as you know, is the first and only global virtual incubator accelerator in the world with the mission of helping 1 million entrepreneurs reach $1 million in revenue and beyond, help build $1 trillion in global GDP and 10 million jobs. We have a very ambitious goal, and we try to work towards this goal in many different ways, not just the acceleration work that we do in our premium program, but also various kinds of free programming, tons of content and media work. So this forum, for instance, is our 256th mentoring roundtable. So this has been going on for a long, long time, and you will find recordings of every single session on our YouTube channel. If you are following us on Twitter, or rather live tweeting the show on Twitter today, please use the hashtag 1M1M. Our Twitter handles are at 1M by 1M and at Romana. It's one of the channels through which we also propagate the messages and the learnings of the program. So if you follow the channels, you will continuously be fed very interesting, inspiring, educational content. And of course, as I said, all recordings of the roundtables are on our channel, 1M1M Roundtables on YouTube. Now, these are the call-in instructions. We're not quite ready for call-in yet, but if you want to make a note of the call-in number, it's 650-479-3208, access code 669-825-260. So please make a note, and I will put the slide back up when we are ready for call-ins. We are continuing with our celebratory events for the Entrepreneur Journey's $1 Billion Unicorns book. This is the 12th in the Entrepreneur Journey series. So those of you who've been following the series, it has come a long way. It started with the launch of our first volume back in the fall of 2008, which is when we started experimenting with these mentoring roundtables as well. So many different bits and pieces of experiments have led up to the more comprehensive 1 Million by 1 Million program. Okay, so today we have a very special guest, Roman Stanek, CEO and founder of GoodData. Roman is a serial entrepreneur, and he's originally from Czechoslovakia. But today he's based right here in Silicon Valley, in the heart of Silicon Valley, and is doing a very impressive company, GoodData, that is probably going to be a unicorn company. I don't know yet what your current valuations and so forth are, but it certainly has all the unicorn characteristics that we tend to notice. So Roman, welcome, and I'm so glad you could make it today.
Excellent, thank you. It's good to talk to you again.
It's great to talk to you, absolutely. So Roman, you're a serial entrepreneur. You first started a company that did not get to 1 million in revenue, but was sold for $10 million to Sun, and you were still back in Czechoslovakia at the time. Then you started another company that did get to $1 million in revenue, and you sold it for $100 million to HP. GoodData is your third company, and you provided the first $2 million in angel investment yourself. Of course, most entrepreneurs do not have the luxury of providing $2 million in angel investment to their companies themselves. But I think your track record and the way you have navigated your entrepreneurial journey has some lessons for our entrepreneurs who are very young or who are just starting out with their first businesses. And the question that I want to put to you as a first question is, do you agree that for a first-time entrepreneur, it pays to do a venture that may not be a unicorn, but provides opportunities for learning, and if they're successful, they can, generate significant cash to go after something bigger?
Yeah, I absolutely agree. First of all, when I started NetBeans in 1997, the whole concept of unicorn valuation, $1 billion valuation, actually didn't even exist. So this is fairly new thing, and I absolutely agree that it's really the goal should not to be get to a unicorn. The goal should be to get to a good company, and then if it turns out to be a unicorn, that's actually amazing. You can say that I always wanted to build a unicorn, and you know, I failed twice. But you can also look at it the other way, which is that I'm kind of, these are stepping stones for me to get to a real outcome. And if you see, some people are, some people can go and start Facebook as their first startup and get to a unicorn. Other people need a couple of companies to get there. I don't think, and I actually don't even believe that you need $2 million to go and start a unicorn. It's probably more about experience and kind of, working on the right opportunity and having the right timing. So building multiple startups actually helped me to get to the right timing with GoodData, because 10 years ago, I clearly couldn't have built anything like GoodData.
Right, and I think what you're saying is exactly what we heard from Fred Luddy last week, who's the founder of ServiceNow. And Fred, built almost $40 million worth of revenue with just $2 million worth of capital. And even before they started raising capital, he had validation with customers and so on and so forth. So this actually gives us a good segue into the second question that I want to ask you, which is, we've talked previously about how you zero in on a market opportunity by immersing yourself in customers. Can you double-click down on that process and share with our audience some repeatable methodology nuggets? What comes first, intuition or customer feedback? Which is more important?
That's a tough question. Only 5 years ago, people would have said, "Oh, customer feedback is 100% of success. If you're not customer oriented, you're not successful." And then Steve Jobs came with the iPhone, and nobody wanted iPhone, and he was successful. Now people say, "Well, look, it's if you only rely on customer feedback, we would still have faster horses." So it's I don't think it's one is better than the other. I actually do believe that intuition is absolutely critical to start a company and major decisions that entrepreneur needs to make with a limited amount of data, and sometimes almost against the will of the customers, because the customers have different priorities than the entrepreneur. But at the same time, nobody can build a successful company at a scale without actually hitting on needs of the customers. And what's actually new, what happened in the last couple of years, especially with subscription services like GoodData, it's not only about the initial customer feedback, it's the ongoing experience, going back to the customer. GoodData just this year, we won the Stevie Award for the best customer support, and that's part of my customer insight, having the best customer support team that can go not only to the new customers, but also to existing customers and help them to get better experience, but also help us to get more information how these companies, what they actually expect from us. So intuition on one hand, and then on the other hand, investment into customer processes, customer advisory board, award-winning technical support or customer support. That's all part of the kind of the customer journey.
So could you take us back to when you were starting GoodData? What was your fundamental intuition, and what was the fundamental nugget that the customers gave you when you went out to validate that intuition that brought it all together for you?
Yeah, so when we started, my intuition was that, as the world is moving to the cloud, the data will be moving to the cloud as well. That data will not be stuck behind the firewall on premises and so on. That at some point we will see the world where one of the main assets that people will actually have in a cloud is the application data or company's data. And that was not obvious. I have I spoke to analysts and they said, no, that's never going to happen. Nobody will ever give you data. Initial VC meetings didn't go well because the VC said, no, why would anybody upload their data? So people didn't get a point that, you don't need to upload data into the cloud in the world where data will be actually created in the cloud with applications like ServiceNow and Salesforce and so on. So that was kind of my intuition was that, it would work. And then, we built the first version of the product very early in 2008. And, we went to first customer. It happened to be one of the cloud pioneers, one of the leading customers of Salesforce. And they, when we came, to visit them with a new product, it was the first beta of the product. They essentially said that's exactly what they expected to happen in the world. They paid us money. They gave us lots of feedback. They helped us to promote the company. And essentially, the first year we were kind of relying on them to be primary marketing channel because they wanted to be successful with us, and they had the same intuition and the same worldview as we had.
So that also says that your early customers had to be customers who had already adopted the cloud, who were sold on the cloud value proposition, and your choice of Salesforce.com customers were perfect. So they were perfectly aligned with that psychographic, so you went aggressively after that customer set, right?
That's correct. That's absolutely correct. And again, but the example that I used, the industry analyst community, not understanding or not believing us and so on. That's a good example that, why you sometimes entrepreneurs need the intuition. I could have gone to analysts and say, you spend, 25 years in this market, tell me, is this going to happen or is this going to happen? And analysts would have said no. So that's when I relied on my kind of, experience and intuition. And it needs to be the combination. And then the third thing is picking the right market, because again, we could have gone to, big banks and they would have said, no, we would never give, they still don't give data to the cloud. So, relying on intuition, picking the right addressable market, and working with customers with the same worldview was absolutely critical for us.
And that comes to the topic of positioning. I think if you have to get a new concept to market, I personally don't think analysts or investors have the right view. They don't have the intuition, except for a few, unless they really have some very special insight into a market. Typically, they do not have intuition about a new market, and that's a good thing, because if they start developing intuition about the market, then everybody in the industry is going to follow, and you're already a little bit into the, kind of the level.
Too late.
Everybody wants to invest in this particular insight and this particular trend.
Yeah. Exactly, and it's the typical innovator's dilemma, and there are parts of the establishment who like status quo. That's who they are. So you can never expect that for a truly innovative idea that it will be received well from some parts of the market, but and as I said, sometimes even customers have different perspective. Sometimes customers have their own priorities that don't necessarily align with yours, and that's why product management is so critical for the early stage of the company. There are two very critical, obviously, parts. It's one is ability of the founder to go and sell the ideas to initial customers and VCs. I always believe that it's not only important to have an idea, but being able to sell it is as important, if not more important. But then this kind of notion of very focused product management that can actually identify what is the common problem that everybody will want to solve, and what is actually specific to a small group of customers that will never become a big market. That's a big part of the success.
And that lead customer, the early adopter customer set that is going to be able to understand what you're talking about as an early intuition is a very, very important part of bringing a new product to market.
Yep, absolutely.
So tell us more about GoodData. What are you doing, and what is the secret of the fast growth? Why is of course, we just talked about a phase of the company where it was not obvious and it was very much the early adopter game, but that has changed over the last few years. Cloud has become very mainstream. There's huge adoption. People do understand cloud, and of course, cloud now is the buzzword. Everybody wants to invest in cloud this and cloud that and cloud big data, blah, blah, blah. So what is happening? What are you doing? What's different, and what's causing the traction in your case?
Yeah, so I still remember the first conference I went to when one of the persons in the audience stood up and said, I would rather give my users no solution than cloud-based solution. So that was the sign what to expect in like 2009. But as you say, things have changed. I believe that the secret of GoodData is the fact that we are very much focused on the outcomes. If you look at the whole big data industry, actually I should say the whole BI and data industry and so on, the outcome is secondary. It's all about the technology. It's all about a tool or toy or, is it Hadoop one day and MapReduce the next day and Spark the third day and so on. We are very much focused on the outcome. What is it that we actually deliver to our customers? What's the time to value, agility and ROI and so on. And so we are much closer to business applications like ServiceNow and Salesforce in terms of focus on outcome than we are to Oracles and the Hadoop companies and so on, companies that focus on technology and plumbing and infrastructure. And I think that, our customers really appreciate that focus, and we actually call what we do, we call it insights as a service, because we actually focus on the insights. When I go to my customers, I don't ask them, do you want to buy this version of Hadoop? I ask them, what insights do you want to learn about your business, and how quickly do you need them? And we always say that we start with insights. We don't start with infrastructure.
And your first use case was in the sales intelligence area, sales leads and What is your top use case today? What are your top insights that you provide in what areas?
I would actually call it, digital transformation. If you look at what companies do, many major companies do, they move their business processes to digital. Salesforce was only the first step, then marketing was the next step, and customer care. We spoke about the need for good customer care and all of that. So companies are essentially creating kind of the touch points with their prospects and customers, and these touch points are no longer phone and paper and so on. They are more and more digital, and GoodData helps our customers to connect those touch points. So sales analytics is a small subset of that, but any part of customer journey, from the day customer comes to your website or interfaces with your social feeds, all the way through the sales process and implementation process and customer lifecycle, that all generates more and more data all the way through call centers and so on. And GoodData helps to companies to collect all of those touch points and understand what's the customer journey and where companies can get better at how they actually deal with their customers and prospects.
So which brings us to the next question, which is about your go-to-market strategy. I know you have used a kind of two-pronged go-to-market strategy. One is direct, inside sales, and then you are also doing OEM. So does that mean that all these different use cases in marketing, in sales, in customer service, are these use cases developed with other vendors who have domain-specific technologies, and you do OEM deals with them?
Yeah, exactly. I'm a big believer in these kind of OEM or embedded deals. You know, the world is actually moving into what I would call, and again, that's kind of the intuition that I can share with the audience. And the world is moving in you know, what we would call smart applications. And the smart applications are applications where, you know, data and applications are not separated. You know, if you think about how it used to work in the past, you know, you had your application on screen 1 and you had your BI tool on screen 2, and you look at your customer and you had no idea, you know, you look at your customer profile, for example, and you had no idea, is that customer in a good shape, bad shape, are they going to churn, are they going to buy more? You had to go to another screen and analyze it there, and then you go back to your screen where you actually deal with the customer. The vision is that we will actually integrate applications and data and analytics, so the application will be able to, you know, to predict the customer behavior. And so we absolutely believe in this notion of embedded analytics into the application, and that's why we work with more and more application vendors to help them to enrich the applications with analytics.
And what percentage of your business is these kinds of OEM relationships?
It's about 50% of the business. But again, you know, I do believe that in 10 years you will not see, or maybe in 15 years, you will not see business intelligence as a, you know, separate category. It will actually be subsumed into the applications, that your CRM, your call center, your you know, e-commerce applications, they all will have some notion of analytics in them, because that's the way these companies will actually differentiate and make the application better.
You're saying that people in the audience who are building companies, you know, that are technology companies in the area of big data and analytics should think about OEM strategies as well that power insights and applications, embedded applications like yours.
And exactly, and the way around, people in the audience who are building business applications should think about how to make them smarter, how to essentially blend, you know, what GoodData does into their applications to give their users better experience.
Yes.
You know, we cannot rely. If you think about, you know, many today's business applications are the still same form-based applications that we had 20 years ago. You know, I don't go to my green, you know, fonts terminal screen. I go to web browser, but it's still pretty dumb application in most cases. And what it can make it much faster, much smarter experience is actual analytics.
Yeah, absolutely. So analytics needs to become a feature of every single business application and in context of whatever business problem it's, whatever business process it's dealing with.
Absolutely. Yeah. Maybe even feature is kind of even too specific. It's almost like an aspect. You know, feature is a part of the screen. You know, it should be even more blended when, you know, for example, you know, let me give you an example. A good smart application I use. You know, if you go to Google, they have a Google Now. So Google can tell you, you know, that if you have a meeting on your calendar that you should leave, you know, 20 minutes early because there is a traffic jam. That's analytics combined with calendar. You know, that's not feature of the calendar. It's actually the calendar is acting smartly because there is analytics.
Yeah. So where are you now? What stage, whatever metric you want to share, what kind of, you know, what kind of penetration do you have into the market? Where are you going from here? I know you raised a lot of money at this point, for over $100 million. Have you hit the unicorn valuation mark already?
No, you know, we are privately owned company, so we don't comment on valuations and revenues and so on. You know, it's really exciting. For me, the main metric is, you know, the way I measure the company. There are two main metrics. One is predictability. I always, people ask me, when will you go public? And I say, when we will actually get predictable. You know, I always believe that publicly traded companies can only have one surprise, and it's positive surprise. So as long as your business is unpredictable, you should not go public. So I'm working on very much on predictability, how we can deliver every quarter after quarter, good results, and only surprise our investors with positive surprise. And I recently hired a very strong CFO, and it's part of the process. And the second measure for my kind of where I am with the company is the NPS, Net Promoter Score. I absolutely believe that in this world, then the NPS is the primary metric for any CEO. We need to understand how our customers feel about our business, because the penetration in the market cannot be done by only our salespeople. It needs to be done by our customers, telling other customers how good the experience is. So I'm measuring and looking at NPS bi-weekly. I have a team that actually shares the NPS number with the rest of the company every month. So everybody at GoodData actually knows that where our NPS is, and I can tell you that our NPS is getting better every single month. For the last year, we had every single month a dramatic increase because the whole company is focused on it, and our customers agree.
Good. These are the kind of sense that needs to be sold into the market right now, because the market is quite insane and behaving very, very irrationally. And we like to hear entrepreneurs talk sense.
Thank you.
So last question, Roman, you are from Czechoslovakia. When we talked last, you told me that you had engineering in Czechoslovakia. Do you still have engineering in Czechoslovakia, and how is that working out?
No, yes, we do, and it's working really well. We have locations in Prague and Brno, and it's I would actually, it's not a huge cost saving. It's the economics are actually with the dollar, where the dollar is today, it's got much better, over the last, I would say, year, 2 years. And, I always joke that at some point it's going to be dirt cheap, but only because of the exchange rate, because the dollar is stronger against any currency in the world. But what I really like about, my engineering team is the combination of innovation and stability. You can actually, there's a lot of innovation in Silicon Valley, but very little stability. People move around very quickly and so on. And, my Czech team is a very stable team, and they work on a hard problem for a long time, and they are very good at it. And so I don't look at it, again, as a is it an economic model? It's not kind of offshore model, how to save money. It's a model where we can have a very stable team, making sure that our customers are happy. It goes back again to the notion that the number one goal, what we do is to provide the best experience to our customers, and having a stable team who does it for a long time is part of the solution.
And are you plugged into what's happening in Czechoslovakia around entrepreneurship today?
A little bit. I was there 2 weeks ago, or maybe a month ago, and I spoke in a room full of students. I had like 500 people in the audience, lots of interesting questions. It's a typical thing coming from the young people. Half of the questions were extremely relevant, the discussions we could have today. The second half of the questions was mostly around how do I become rich really fast, and I cannot help them with that.
So there is energy and curiosity developing, and not yet probably that many companies developing.
Yeah, no, it's actually, the companies are there. That's the thing about the world today, Everybody in the world reads TechCrunch. You can assume that every 20 and 22-year-old reads TechCrunch around the world. So, I see companies popping up in every single part of the world, and that's so exciting. And what you do and your programs and so on, you are helping with that. And it's so you should assume that in every single country in the world, you have an audience, people who want to build companies and want to get to $1 million revenue, even though sometimes it doesn't mean to get rich really quick.
Well, this is the problem that we deal with, actually. Everywhere there's TechCrunch readers and entrepreneurial enthusiasts, but the problem is they all want to get rich quick, and they don't understand that the whole entrepreneurial journey is a marathon. It's not a sprint. It's not a get rich quick scheme. It takes many years to build a real company.
Yeah. It's really painful. I actually told them that the entrepreneur might be the worst career choice they actually might have. Risk adjusted, it actually makes almost no sense.
That's true. Well, thank you, Roman. I know you have to go. Thanks for coming, and I'm sure we'll have you back again in a while.
Thank you. Thanks for having me. Bye-bye.
Bye. Okay, folks, we're going to switch the mentoring segment of the program today. We are starting with Shrikant Jalapuram in Cupertino, California, right? Valley. Shrikant, if you could unmute your line and talk about what you're doing, that would be awesome.
Hello. Hi, can you hear me?
Yes, please go ahead.
Okay, awesome, yeah. Hi, my name is Shrikant, and one of I'm going to talk about this product that we have actually come up with, which is called a envelope, which is a universal BLE beacon-based solution. It's basically targeted to two key verticals. I'm going to talk about the retail, I think, in the interest of time, but a lot of the principles will actually apply to even healthcare, because the core platform is based on what the gentleman was talking just now about smart applications, right? It is basically the ability to use data and be able to get real-time insights based on segmentation and personalization, and being able to deliver value rather than anything else to consumers in a B2C model, where you also have a B2B model for engaging brands and retailers and similar other players or actors to be able to use this platform to provision interesting content, deals, advertisements, and stuff like that can be actually provisioned on a platform, and that can be delivered in real time to people who are actually going about their lifestyle, whether they're walking in malls, they're going to restaurants, they're in a Starbucks, or they're in a McDonald's and stuff like that. So in effect, what we're seeing is we have a very strong analytical component or an engine, which is basically using a lot of the data that we procure from users in the form of the applications that they use on the mobile, like iOS, Android. And then also we have the concept of beacons, which is basically a Bluetooth low energy technology, which is now already 6 to 8 months kind of an old technology now, which is introduced initially by Apple, but we also have the same capability in Android right now, which basically allows to place these beacons into strategic locations in different types of businesses, whether it is McDonald's or, as I said, it's a big shopping mall in different places, strategic locations. You can basically group them logically, or you can, scatter them however you want, and these can be provisioned using the same platform that we have. These are the beacons, and it has the ability to detect users when they are actually walking by. It's also called proximity detection. The beacon knowledge is already available on the mobile devices, because the behavior of those beacons is provisioned through the same platform that the users are engaging with via the mobile applications. So the user experience is all about in the moment delivery of some rich value, targeted offers and deals to the users, as well as content, as well as specific pieces of information in the form of push notification, like maybe some public service announcement that a mall wants to give, and they want to give some contextual data and stuff like that. So the key here is, I think, the analytical part has a huge potential in terms of capturing the data of day-to-day movement of these users because we have an ongoing dialogue system that basically has an ability to kind of hone and fine tune what people are liking and not liking, and that basically, it's like a very personalized, right in the moment, if somebody asks you a question, did you really like it or not, so that ongoing dialogue system actually, yeah.
Can I stop you for a second?
Yeah.
So let's just get the basics here. Are you expecting that users will download this application on their mobile phones? Is that a requirement of your architecture and usage model?
Yeah, it is actually, it is both and not, it is required and it is also not necessary. The reason is, if you want to have an ability to, engage with the user experience where you want to be able to share, you want to be able to receive deals and coupons.
Hold on, Shrikant.
Yeah.
Your customers are retailers and health providers, but for these customers to be able to communicate with their customers, do their customers need to have an app on their phone, otherwise they're not able to communicate? Is that a basic fundamental?
No, not really. What I'm saying is we can actually use simple push notifications also. But the point I'm trying to make is, because there's a lot of rich media and rich content and, show and tell visual assets that are required for coupons and deals and stuff like that, that is,
how do you
that
do
ability is there.
notifications? You then just send text messages to people's phones?
Yeah, we have an ability to send text messages and push, yes, that's right, push notifications, yeah.
But you're not doing that in an intrusive way. People have to opt into this, right?
True. So exactly, the value of this application is, what we are saying is we are creating a stickiness where, the more and more they engage, they basically it's like, the amount of value that we deliver through the mobile application is so immense that, we feel that, using either the word of mouth or, viral marketing or, through social media, we will basically bring it to a point where they will have to get onto this platform, where there's also a web offering as well for the users.
Okay, Shrikant, so now we'll need to look at the competitive world around all this, right? Every retailer has an app already.
They do, yeah.
Every retailer who has any clue has an app. If they don't have an app, they're clueless and they're not going to get what you're trying to tell them. If they haven't yet figured out that mobile commerce is big, they're not going to buy your solution. So if that is the assumption that there is already a mobile app of the retailer and that app has been downloaded by the target audience, are we talking about yet another app, or are you pushing into the existing app?
We are basically having both capabilities. We have a library which allows the modification of existing apps that, let's say Gap has it, or let's say Guess has it, or Banana Republic has it. The point I'm trying to, so that is possible because the mobile library that we have, which brings in an element of beacon technology into those applications. But the real value, what we are seeing is, we are saying we are going to stay closer to the consumer and be very personalized, and we basically aggregate everything to them, and we are basically saying, we understand your lifestyle so very well that, it's not just about, you may have 4 or 5 vendors who are, selling shoes. Maybe there are 10 vendors who are selling jewelry. There's so many other vendors who are selling fashion. If they have to go on that path, they pretty much have to start downloading apps for Gap or, Old Navy or, maybe so many different vendors. It becomes
that's what the brands want. If the brands don't want your app on the user's platform, the brands want their apps. So the moment you get into the sales cycle, they will tell you that they want their branded apps on the user's platform device.
Yeah, but
uncomfortable with the assumption that you're making that the brands will let you put your apps on their apps. That's the assumption that I'm uncomfortable with.
Well, I mean, that is the barrier, we will be able to break. The reason is, the end of the day, the user experience that we create is also very closely aligned with the brand engagement that they would want to, because we will be able to bring them to a point where we say, hey, this is the value that we will be able to generate because of our powerful analytics and the ability to understand the lifestyle. Because brand perspective is all about, okay, if there is a shoe company, they're only looking at from that perspective, or if there is a company which is selling, let's say, fashion, they're more focused on that part. So what I'm trying to say is, we are looking at a 360-degree view of a consumer and understand their daily lifestyle, and we have such a deep insights into their analytics based on our analytics that we are saying we will be able to pretty much implant the right kind of deals and the right kind of value at the right time.
That assumption is predicated on the fact that you can solve the chicken and the egg, and so what customer validation have you done?
We have actually worked with a few brands in the South Asia. Where basically here are the two things, right? One is the segment is like a tier 2 retailer. The second one is like you have your mom and pop kind of entities which basically have, let's say, 4 or 5 or 6 branches. The simplicity of engaging with this kind of a platform, we have made it so simple that using even your mobile phone application, which is specifically designed for these kind of brands and retailers, they can actually use a mobile to actually take a snap of a particular deal, or they can use an SMS to provision deals that can actually target it to users. Yeah.
Is this product designed for South Asian retailers, or are you trying to sell into the US market?
It is global in nature. It is not designed for South Asian market. It is pretty universal as such.
Right. So if that is the case, then I see a lot of problems with the assumptions that you're making, and you better start validating with customers, especially if you're going into the US market. I think the US market, from a retail point of view, understands that mobile commerce is big, and and most brands are already on the mobile phone. So finding customers who are not on the mobile who will buy into your value proposition, I'm not totally comfortable with these assumptions. That's my feedback to you.
Sure, okay? Yeah. Thank you.
You're welcome. Banu Priya, you're up next, Bangalore, India.
Hi. Good evening. Good morning.
Good morning. Go ahead.
Yeah, thanks for this opportunity first. I'm not from technology background, but I'm from toxicology and pharmacovigilance background. I tried to pitch in this round to understand and develop funds for and take few advices from you, and that's the aim of me coming into this presentation. Okay, what does my company do? We provide pharmacovigilance services. What are they basically is we aim at working only for European clients. What we do is to aid the reduction of cost in reporting of the pharmacovigilance report by helping the client whom we work very specific to small, and they should be from the medical background. So whomever is willing to market the product in Europe, they can be from any other part of the world, but they want to market the product in Europe. And the product can be of any nature. It can be a drug or a device. So we help them to do compliance with the regulatory system by providing solutions and as well as innovative methods. That's what we aim to do in coming years. We are a group of companies, one related to training and one is related to aiding Indian pharmaceutical manufacturers to file in Europe, and the third one is from US, so that the global product launches can be addressed from US market. Can I have the next slide, please? So the clients whom we work so far, and why we have identified this area as a business model. The reason is ideally before 2013, when you want to file an adverse reaction or a pharmacovigilance report, you have to spend somewhere around 300 euros, and the cost of that has been reduced after the union and unified guidelines which has come in the European Union. So it now costs nearly around 180 euros to manage a report. We aim to bring that cost from 180 to 90, so that we would be able to work with the small and medium medical companies, so that they can spend a lot of resource in developing the product better way. So that is our concept. And we also work for only bill them for the work we do. We don't want to pay a retainer, or therefore the managing the safety of the product becomes costlier to the small and medium customers. So this is the main service what we provide. We help them to manage the regulatory information system and also the safety management system for the client. So we do have.
Service.
Can you please repeat, Anna?
Do you have a product, or is this a service?
We do have a service and we do have a product. We do have both, but they are not an approved version so far.
What is the product? What does the product entail?
The product is into capturing safety data, and it also helps to manage globally the safety data. So the small manufacturer who wants to launch the product in different regions can comply with it, versus if he wants to try getting a bigger safety software and implementing it and spending big money. So this product would help him to comply with various aspects, and this is on the patent line, so I'm not allowed to talk. I know you said earlier if it's patentable, you shouldn't be worried about, but I'm not allowed to. I can send more details if it's related to the product. But the service structure, yeah, sure.
Do you have customers?
We do. We do have customers in very unique way. The main three services what we have in the organization is one for the pharmacovigilance, second is for risk-based management, and third is on training and audits. So people come to us if we have developed a product. They want to know in terms of regulatory how compliant is their product is. So we work customers in this way. It is their product. We are, the product what we have now, we are looking at marketing at an international level, and the current aim is to raise funds to do the marketing, and as well as to get the international, the ISO 9001 and also IMQRA certifications to this product.
So, Bhanupriya, this is not a fundable situation. What you have described so far, I think this is a fundable situation. There's a, raising money for a business, it requires validated, customer validation. And just based on what you've said so far, it sounds like you have customers, but they're not exactly for the product that you're selling or that you're trying to build and sell and so forth. So it's not exactly a validated product. There's no notion of what is the total available market or anything. You haven't presented any of it. It just sounds like too early a concept for it to be fundable at this point.
The product being fundable, yeah, you are true. You are true.
All right. So that's my feedback. If you need help in figuring out how to actually build this business and all that, you can hold on. I'm going to spend time later on in the program explaining to you how 1M works with entrepreneurs. But first, I need to work with Laura.
Absolutely. Yeah, sure. Thank you.
You're welcome. Laura, you're up next from Budapest, Hungary.
Hello?
Go ahead, Laura. Yes, please go ahead.
Okay, hello. Yeah, okay. Our product for the children, and if to be honest, for the parents and grandparents, and self-teaching education institute, and next step, kids for himself. This product is early development system. Okay, just.
Am I on the right slide? I wasn't sure. You haven't told me what slide you want.
Yes, I will be trying working with slide. Okay, just a moment. It's so fast. It's not here. How I can back? How I can back with my slide?
Just don't worry about it. Keep going. I'll figure out. You know, I'll just move this.
Okay, I find it. Okay, it's okay. Yes. Now problem is, and we have in so many schools for development children and teaching, learning some new system. Just and age from 1.5 and 3 years is so boring because it's not school age, and more time we have in with parents. And what is idea? Idea is education technology, neatly in simply system, and sorted by age and topic category. Focus children's learning with playing. It's philosophy with playing in easy, like so many things coming together. Parents, and this will be key for this system because parents help open some new in so many time we have in with our children.
What you're saying is that you want to build products that help parents and grandparents teach their children and grandchildren.
Yes, this system will use from just example Glenn Donovan and Nikolai Zaitsev, Montessori. Just this will be system, step by step, how we can do. If you will be look now internet, so difficult find system. We will be find so many applications, so many just every small. We can learn mathematics, we can learn and read, we can learn some small things. We think about build together. How many living children, how many learn day by day.
So what is the form factor of the product? Are you developing an app?
It's software as service. Software as a service. In next step is application, of course, yes, but accent using smart gadgets.
So the customer is buying a smart gadget, or the customer is buying an app that is on a existing device?
Yes, software. Yes, using software. Customers will be using software, and of course, will be have application can use this with not PK, can use with iPhone, iPad, like in smart telephone. In some
Do you
tablet.
have software designed already? What is your current situation?
And current situation, we have idea, and we look around, find some software engineer who will do this. We have in technical plan what we can do, what we have now, and what we can have in finish, and the finish. And we have material like in the Glenn Donovan system, and we have good connect with Nikolai Zaitsev, and this another system. And we look now like content we have. Now we need building software and put this content step by step.
Given where you are, given the level of clarity you have today about what you're building, your goal for the next 3 years of 1 million users, 5 million turnover per month, and IPO is not realistic. So let's start with the basics. You need to define what is going to be the first product with which you're going to go to market and how you're going to go to market, how you're going to acquire customers for that product.
Okay.
And forget about everything else. First and foremost, just get that in place and understand what is the competitive landscape. This is a very crowded space. Unless you're doing something in Hungarian that is language-wise specific to your geography, your community, where perhaps competitive analysis is very different, but if you're talking about an international market in English, this is a very crowded market.
Okay, this maybe you're right, yes, but we think about English language and Russian language, two language, and for the first step.
You need somebody who understands English and speaks English very, very well, and you need to do the comparative analysis of the English-speaking market around these kind of preschool or small children's learning tools. If you look at the iStore, it's full of this kind of. It's a very, very crowded market. So it might feel that you're very unrealistic about what you are thinking is viable here, and you haven't done the competitive research, competitive analysis of where you're going, what other people are doing, how they're going to market, what is getting traction, what is not getting traction, and you really need to spend a lot of time understanding your market and what other people are doing already.
Thank you.
Okay?
Yes, okay,
thank
you.
How can you be fundable? You're way, way, way far from fundability at this point. Okay?
Yeah. Okay,
so I will
thank
spend some time next going over how we work with entrepreneurs, and I will explain to you how 1 million by 1 million works. Let me, however, before I do that, there are a bunch of people who have provided very nice introductions in the public chat. I just want to read out, kind of call out these people. The Venkata Motamari is calling from India, working on developing experience gifting startup in India. Steve White, startup is remote to PC. We offer an online tool for IT people to be able to monitor system health and gain remote desktop access to the computers they support. We are currently in beta testing and hope to launch in the next month. Excellent. Pranay Sanghavi from India, working on Family Joy app, high potential global consumer mobile venture. Payal Lal from India, living in Singapore, an entrepreneur, blogger, and student, working on an EdTech project that lets people taking online courses find a group of people to learn with. Excited to be here, learn about startups. Maithili Acharya, also from India, online seafood store, and one more startup for students who want to work part-time. Okay. Okay, now Payal and Maithili are conversing. Let's see. Gautam Thotapalli, IT engineer currently in the US, working on my idea of an IT advisory consulting for SMBs. Okay, so that's kind of the introduction sets that have come through in the public chat. Feel free to continue and converse, and I will also take you through the way to use 1 million by 1 million if you choose to use this platform to train yourself in building your startups. So first first and foremost, if you like what we're doing here, please refer the program to other entrepreneurs, other serious entrepreneurs who understand that this is not a get-rich-quick scheme. Building a company is a many-year process. It's not something that you do overnight and become very rich. So 1M by 1M.com is the place where you're going to find all the resources that I'm going to discuss now. You'll find a great blog on our website full of inspirational, educational, extremely informative material, and we strongly recommend you follow that. You will learn a lot just by following that, and it's completely free. Then we have the Entrepreneur Journeys book series, of which we've published 12 volumes. Again, a very low-cost entry point through which you can start learning methodology and various areas of the entrepreneur's journey and how to put one foot before the other. Also very inspirational and very educational. This is what our site looks like. There are tons of videos in there as well, and we have these roundtables, the free roundtables, every week. This is our 256th session, so it's been going on for a long time. If you want to reserve a slot to pitch, please go to free public roundtables on the top left corner of the brown bar, navigation bar, and you will find the registration information for every single date, and Maureen will make sure that you get a slot. If you may or may not get a slot for the date that you register for, it depends on how booked we are in advance, but you will get a slot. That much we try to ensure. Then we have the 1M1M Premium program, where we provide you with extensive methodology guidance, a very powerful curriculum, help you with business development. We give you extensive strategy consulting, and we help you with financing and media relations. This is the $1,000 annual membership fee premium program. The $1 Million Club link on the website gives you some case studies, successful 1M1M companies. You will also find an ROI analysis on the website. Lots of orientation material as well. The 1M1M self-assessment is an assessment that you can use to ask yourself the kinds of questions that investors would typically ask you. You will find lots of information about the premium program, what to expect, video FAQs, and so forth that will help you evaluate whether this program is the one that you use to learn entrepreneurship and how to put your one foot before the other. We teach the curriculum in case studies and video lectures. We've been developing case studies for almost 10 years now. We have the most powerful and rich collection of case studies. We've had over 600 entrepreneurs come here to this forum and share their stories, their journeys, their lessons from the trenches, their advice, and we've stitched all this up so you get to learn from 600 plus very successful entrepreneurs, and some of them we are also inviting back into these roundtables to come and share some of those insights and have conversations with you. As you saw, we had Roman today. Last week we had Fred Luddy from ServiceNow. The curriculum has 7 core modules: bootstrapping, positioning, market sizing, customer validation, financing, customer acquisition, and team building. And then we have a bunch of electives, including how to build unicorn companies. And we have all sorts of vertical electives: Web 3.0 and e-commerce, cloud computing and business solutions, big data, mobile and social apps, etc. Our methodology is lean, capital efficient, bootstrap startups. Even if you choose to raise money, you're going to have to bootstrap the early phase, the early validation phase, and that's a requirement. Investors do not fund unvalidated companies anymore. We also help you a lot with media and getting the word out there. So we use our own channels, our social media channels, as well as get you coverage on other people's platforms. You can use our Twitter, Facebook, LinkedIn, and blog channels to get your word out. We have extensive presence in social media. And also, if you're trying to do entrepreneurship development in certain parts of the world, you're welcome to become partners with the program. We have a very strong affiliate program that you're welcome to use. Upcoming free roundtables pretty much every Thursday from here till the end of May. And again, please book your slot to pitch if you would like to. Vision India 2020 is the 13th book from the 1M1M platform, And that is a book where I have published $45 billion business ideas. And the goal of this program, of this book, is to help you ideate. If you haven't yet zeroed in on an idea, this book will help trigger ideas. And that's the primary goal of this book. The One-on-One Incubator in a Box is our program that we use with corporations, mostly corporate partners, to run their corporate incubation programs, whether it's intrapreneurship or community development. So if you work for a corporation and your corporation is looking for such a program, you're welcome to reach out to us. Once again, the more recent Entrepreneur Journeys books are Billion Dollar Unicorns, Carnival in the Cloud, Bootstrapping with a Paycheck, From E-Commerce to Web 3.0, How to Leverage the Evolution of the Internet. And we are ready for call-ins. So I know there are a lot of people in the room. If you would like to dial in and ask questions, or if you would like to ask questions in public chat, either of those are fine. Please feel free. Now is the time. Please follow the instructions on your screen. Anybody? Questions, comments, introductions? Remember, this is also a networking session. As you guys are networking very effectively. I can see that. That's wonderful. No? No questions? How boring. Nobody has any questions, nobody has any comments, insights, nothing. Well, all right, let me introduce you to Irina Patterson. If you have questions about the 1M1M program, whether it's the right program for you, whether you want to join or not, etc., please feel free to reach out to Irina at 1mby1m.com. Her phone number is 786-301-2456. She would prefer that you email her first so that she can schedule a time to talk to you. Payal Lal is asking, I really like that you keep pointing at customer validation. What's the best way to do it? You know, we have a very comprehensive module on customer validation, and unfortunately, I cannot take that whole module. It's an extensive, you know, body of lectures and case studies and so forth. So my suggestion to you, if you really want to learn how to do that, is to join the premium program, and you will be able to access that module, and you'll learn everything that you need to learn on the topic. Anybody
Hi,
else?
guys. Hi, this is Irina Shamana.
Go ahead, Irina.
Hi, guys. I just want to say hi, and you please don't feel intimidated or scared. This is a very friendly environment, and there is nothing to be scared of.
Well, let me actually correct you. Irina, it's not necessarily a friendly environment. It's a safe environment. So be prepared to get very authentic, constructive feedback and critique. Just know that it is to ensure that you hear authentic feedback, not what you need to hear, but not what you want to hear, but what you need to hear. You need to get the right feedback so that you can make progress. You can address areas where you're weak. And unless you get that authentic feedback, you will not be able to address your weaknesses. That's the whole intent of this program, right? So that you can learn.
Right.
So don't expect that friendly and safe doesn't mean that you're going to hear what you want to hear and it's going to be all sugar-coated. It's going to be authentic critiques, but it is with the intention of helping you become successful.
Exactly. That's exactly correct. What I was trying to say that it is all in your best interest. So you would not get misled into some bogus direction.
That's right. Okay, folks, I don't see questions. I don't see anybody dialed in. I don't see any questions in public chat.
Well, one thing, Shamana, I think that we don't have any questions because people don't feel that they can ask the right question. But there's no right and wrong questions, right?
Well, there are questions. Srikant, you want to dial in? Go ahead. Please feel free to dial in. There's no right or wrong questions. Irina is absolutely right. Whatever is on your mind, you're welcome to ask. It's fine. And if you would like to dial in, let me actually put up your the dial-in number here. Steve, what are your feelings about a startup taking on personal debt? You know, Steve, the truth is so many entrepreneurs have done that, and in a lot of cases, though, that has been the seed capital that they have been able to access is you know, maxing out credit cards and basically that's the way they get companies off the ground. So I feel about it. Because please mute your computer, otherwise there's a lot of echo.
Yeah.
So just a second.
No, I've muted my speakers. Yeah.
Okay, Srikant, just a second. Let me finish talking to Steve, and then I'll talk to you in a moment. 1 second. So
No
Steve, so just to finish that line of thought, the truth is a lot of people have had that as their core, you know, pre-seed capital strategy, or, you know, gap, seed capital gap plugging strategy. I personally do not like debt. You know, I am very conservative when it comes to fiscal risk. So I personally do not take any debt from anybody. So that's just my personal philosophy. But that does not mean that a lot of other entrepreneurs have not used that as, you know, personal debt as the way to get their companies on the ground, and have successfully done that. They have raised the money. They have, you know, sometimes paid back debt. Sometimes they have converted that debt into equity and made their, you know, lenders, and turned their lenders into shareholders. There are many ways of handling that, but that's just my perspective. Srikant, go ahead with your question.
Yeah, you know, you kind of got a hinge of an idea of what we're trying to do here, right? You know, I wanted to kind of understand. You know, I remember you said, you know, customer validation. You know, the point is, you know, there's some amount of experience in the retail and, you know, brands as such, because the fact that retailers normally use a lot of omni-channel strategy, which basically allows them to spend money in different types of channels for their marketing, and, you know, trying to use the advertisement dollars and stuff like that, right? You know, you have, for example, you have companies like Shopcake, and, you know, you have, you know, Google is really on the top of the ecosystem when it comes to, you know, advertisement and based on searches and stuff like that. The point I'm trying to make is, while the brands, the bigger brands may actually go and invest in mobile as a strategy, but I think largely most of those have actually failed because the single brand interaction with users, you know, has actually not taken off. So I wanted to understand a little bit more from you, because I have had certain amount of a stint in this space, and I work very closely with some of the brands. You know, they're usually looking for some kind of breakthrough or path breaking, or I wouldn't say, you know, path breaking, but what I'm saying is things that basically lead them to the consumers. You know, their brand engagement as such. You know, because
it's not by talking to me that you will find those insights. You have to go talk to those brands and understand what they're looking for.
Right.
And I think your assumption that there aren't apps, you know, branded apps that are mobile commerce apps sitting on the consumer's devices, that's a wrong assumption, because mobile commerce is absolutely booming right now. And there are many successful e-commerce companies, including new brands, including existing brands that are doing very well, and they all have their own branded apps. So given that is the scenario, and then you have to decide what is your segment, where do you penetrate the market? Are you going after the big brands? Are you going after the mid-market brands? What is their current scenario? What is their current mobile commerce presence? What is their current mobile commerce success? What are they looking for? What are their problems? I can't answer these questions. You're going to have to go immerse yourselves in customers, and that's what we were talking about. What you have, remember when Roman and I were talking earlier in the show,
Right.
He was talking about intuition. I was talking about intuition. You have an intuition. Now you have to go and check this intuition out against the actual market. Without that, you're designing in vacuum, and that's the wrong thing to do.
Right. So your point is right. What I mean to say is the idea is not to go after, I think within the time frame that we had, I didn't get a chance to kind of break all the details, but the goal is to kind of go with a mid-market kind of, for example, you take Yum brands, right? I mean, there are these aggregation of brands that basically run, there are some brands like Cheesecake Factory. You have like, Dunkin' Donuts and Krispy Kreme. These are all are under one single umbrella. These are kind of sprouted umbrella of companies which basically are, these are kind of not really exactly your tier 1, but they are like your, tier 2, upper tier 2 kind of brands which basically have a connected set of, restaurants or, retail outlets that basically are operating under a single umbrella. So we basically saw that.
Typically, when people have different brands, those brands are usually positioned for different audiences. People don't create multiple brands for the same audience. Like if you look at Gap, Old Navy, these are not the same audience. They're brand positioning in each of those cases. So I don't think they want you to go and kind of cluster everything up and try to sell all the brands to the same customer, because it's not the same customer.
No, that's where exactly, that is true. That's where the targeting and personalization comes into picture, and then that's where the ability to even do
for them to go with your solution as opposed to their own branded app. So my sense, and this is again, you have an intuition, I have an intuition based on my experience in this industry. My intuition is you'll have a lot more success if your architecture, if your delivery model is going through their branded apps, which they're already promoting and already marketing. If you're expecting that they're going to sign on to your apps, my sense, my guess, or my feeling, my intuition is that you're going to fail. But I don't want you to take that as a, as a given. My feedback at some level doesn't matter. You need to, I'm just cautioning you that this is my my fear with respect to your business. You need to work out with actual customers.
I think the validation is important. I agree with that. Yeah. So yeah. Okay. Yeah. That's where we are right now. We are actually in the validation phase. We want to basically get as much as feedback as possible, and basically.
And that's the right thing to do right now. If you just immerse yourselves in customers, you will have the answers. But you have to. You cannot. Opt out of that process of customer immersion.
No, absolutely. Yeah. Product cannot be built on a hunch. I understand that completely. Yeah, totally. Yeah.
All right. Okay, I'm going to take a couple of questions from the public chat again. Gautam Totapalli is saying, my target is a B2B service, and I'm currently using the various library resources like Reference, USA, etc., to get the business expenditure of SMBs in my area. I hope that's a good start. Can you please recommend ad? I have no idea what service. This is too little information for me to add or comment. My suggestion would be for you to book a slot to present what you're trying to do, and I'll be happy to work with you. And advisory consulting business is a very, that's kind of like a commodity business. To choose the right IT, it's going to be very hard to differentiate in that market. Ashley Williams, what's the best way to get an investor to see the potential even with not a huge amount of traction? It's a very convoluted process. You have to be able to show the TAM. If you don't have a lot of traction, but you have some validation, you have to be able to show the TAM, total addressable market, and the go-to-market strategy allows you to break into TAM in a sensible way that the investors will buy into. And it's not an easy thing to do. But that's what you need to come up with. Anybody else? Questions, comments? You're welcome, Ashley. Steve White, did I answer your question about taking on personal debt? Are you happy with my answer? Actually, so really focusing on go-to-market and TAM. TAM is one of the biggest things that investors look for, a credible, defensible TAM. Steve says he doesn't like debt either. There's nothing to like about debt, unfortunately.
Shamana, can you remind everybody what TAM stands for? Not everybody knows, I suppose.
I did already, total addressable market. I mentioned that.
Okay.
That's it? Yeah, total available market, total addressable market, whatever is the A that you use, but that's basically the concept of market size. Steve says, it seems like a lot of startups want to invent something that has never existed before. What about startups that target niches in an existing market? It's fine. Target niches in an existing market is perfectly okay. A lot of people actually build businesses by doing exactly that. And we have case study after case study of successful businesses that have been built that way. You don't have to invent something. There are a lot of people in the room today, and it seems like some of you haven't said anything. Are you shy? Are you nervous? Ashley Williams, one word. What's the best way to get an investor's attention besides traction? That depends. If you're a successful entrepreneur, serial entrepreneur with track record, you can get investors' attention without traction, but with your track record. All right, folks, we're going to call it a day today. Please remember to register for the next session. If you want a slot to present, and Maureen will work with you to make sure that you have all the instructions and everything. Thank you for coming today. I hope you had fun, and we'll see you soon. Bye.
Bye. Bye.